Hey YouTube, it's Dimitri, and today I have sold everything. So I have sold all of my cryptocurrency, and by all of my cryptocurrency, I don't mean massive amounts. I started in crypto probably back in 2018, so before all the big run with Bitcoin. I was holding Bitcoin, Litecoin, and Ethereum. I am very safe. I picked the big three here. I've held them for a long time. I sold them. I made money even with markets going up and down and everything. Like, I've held them at enough time, and I got into these markets a little bit beforehand, and so wasn't a loss. I made some money. However, why am I getting out of crypto? I don't really see much of a future in crypto. There are a lot better investments available. I'm going to put investments in air quotes here because crypto I don't think is an actual investment. So there's crypto, there's DeFi, the two parts kind of play together. One of my big excitements here was going to be, I thought the DeFi world and the crypto spaces specifically, I thought they were smarter. I thought there were actual players in the game. And what I mean by this is I'm not a big fan of government manipulation and intervention, which is what we see and hear and claim on the DeFi side and on the crypto side. And, it's so magical. It's going to fix all of our problems, and the dollar sucks. And, the United States is horrible and governments are corrupt. And weirdly enough, we get the exact opposite effect of this. So what I was hoping for is we would see more or less a free market set up with like cryptocurrency, specifically like Bitcoin. We'll talk Bitcoin and Ethereum here. That we would have this nice, free, open marketplace. We would have people that understood that there are illegal activities that needed to be monitored, managed, and maintained because, of course, we want safety. That's kind of part of an asset here. There's a limited supply of Bitcoin, which I thought was great. Fix some of those problems, with the scarcity issue, which is what you need to help drive value. But I thought we would see open marketplaces. I thought we would see more of a move back to capitalism, like pure capitalism. If you don't know, the United States is not a pure capitalist country. We have lots of manipulation and government intervention, like stimulus packages and, trying to fix and control rates. And I'm not a fan of this because I've seen over the years, and as you read books and you look through things, you start to realize that every time we start to encourage market growth, it does encourage market growth. However, the world equation is far more complex how the real world works here. So we'll pretend there's an equation. There is no equation. But this magical equation that would define how the world operates, how the economies move, and how countries buy and sell comes down to this principle that you can't cheat. There's no free lunch. It's a basic economic concept, and yet our own governments worldwide have no idea how this works. You can't, force something up and make markets grow and then not expect something else is going to come down. And so when we see let's make credit available to everybody, let's make rates really cheap, this won't result in anything bad. And then magically all these loans are made and banks are making money because it's basically like free money from the government. They're churning in this money. And then of course they didn't measure their risk, which was, why people didn't get loans beforehand and why rates were higher? Because the default rate was higher because people couldn't afford these houses. And so we pumped a bunch of money in here and we gave out a bunch of cheap loans. And then, people are people. That doesn't matter. It's cheap loans. Everyone's going to get a house and then they're going to have mass default. So, there's all kinds of things that intertwine into this. So as we encourage this and as money's cheap and as houses are going up, then people start getting into these houses, investment properties. And so now that's driving prices higher and higher and higher. And we had this big, massive bubble and then it popped. Again, the similar things going on now with a lot of the stimulus things we did from COVID. We pumped all this money in here and we're going to keep it afloat. And you guys, there's no free lunch. It's someone has to pay the piper. And that's why the inflation here is kicking in. So we all pay more for everything to help kind of reduce back to an equilibrium point, right? That's one of the key concepts in capitalism and how markets work here. So again, I don't see crypto and DeFi doing anything in that sorts. Really, one of the odd things, had a job offer and I talked about some crypto firms about working for them, doing quantitative modeling and helping them out. One of the odd things I found was that they had to find people and pay them for volume so that they could have liquidity in the marketplace so people could trade. So this seems very odd to me. So let me explain this briefly real quick. What ends up happening is, you have people that come to buy and sell. So let's say I want to buy and sell Bitcoin. There's two people, they want to transact here. You need to have enough buyers and sellers to match so that there's liquidity, meaning the two people can transact. The worst thing is, let's say you come to the market to buy Bitcoin and there's no one there to sell it to you. There's no liquidity. It's dried up. The inverse can happen as well. A bunch of sellers can come and say, hey, I want to offload a bunch of Bitcoin, and there's no one there to buy it. So you need that liquidity here. Now, with larger ones like Bitcoin and Ethereum, this is less of a problem. But for smaller ones, and the fact that everyone magically just created their own currency out of thin air, you can't just create currency. There's no value to it. Your value that you're getting is the fact that you're dependent on the US dollar because people are converting dollars into your cryptocurrency. But the weird point with the volume is that the way the stock exchange works is there's a thing called bid-ask spread. So bid-ask spread is how market makers make money. They offer to buy it at a lower price and offer to sell it at a higher price. However, the prices are quite small and quite close, and there's enough participants, which is this what high frequency trading does. You're trying to get that spread, and if you can do large volumes of this, you can really churn it out. You will see a profit. So you make sometimes even less than a penny per trade or per share or whatever, but you do lots and lots of volume here, and that provides liquidity to the marketplace. And now as you have people coming to buy and sell, which are actually investing and are actually doing real investment activities, these more or less these liquidity providers are there to provide liquidity. It's all natural. This is how the market works. The market is paying you. Now that bid-ask spread adjusts depending on the volume, the number of traders. So basically the liquidity, how much liquidity is or isn't available, the risks and all that. And if there's a lopsided, too many buyers or too many sellers or whatnot, that adjusts. The market does that for you because humans are dumb. I am dumb. I'm a quant finance modeler. I don't know because the real world needs to tell me, and I need all these market participants to give me information to tell me what the price is. This is how capital markets work. The odd thing though with crypto is that they were trying to get models, and we were supposed to be building these models if we took the job, where we would pay people for the liquidity. So kind of like the bid-ask spread, but we had to build a model to tell the firm how much money to pay them. So how much is the exchange? So for example, Bitcoin, how much am I going to pay you to borrow your Bitcoin to let it sit here so that I can make liquidity off of it because liquidity isn't naturally occurring? Like this seems very odd. It's just a breakdown of markets. There's not enough actual participants. Now, the other piece of this, the larger reason why I got out and left. So first off, ideologically, they're wanting to manipulate, control, and set up exchanges in a way where they're trying to design them and engineer them. They're not using natural capitalism and markets to drive these, which is, it is what it is. Then on the flip side of that, what they should have been regulating and monitoring and looking at is illegal activities like, drug dealing, sex trafficking, child trafficking, slavery, all these sorts of things, which we as a society would agree are bad. Now, not everyone's going to agree they're bad, but as a society, we should agree they're bad as a whole here. And then, of course, the crypto world is so screwed up. There is no transparency, which is another huge issue here. I mean, the big marketing slogan for crypto is it's transparent. It's not transparent. And so what we start to see here is pull up this article here on CoinDesk. It's talking about, how big is the crypto crime really? So how many of these assets are being used for criminal activities here? And of course, there are reports that say, so this article mentions, the range here is going to be from 1% to nearly half of all crypto activity. CoinDesk analyzes kind of these estimates here, something in this range. Imagine I give you an estimate from like 1% to 50%. That is huge. It's so inaccurate. No one knows. No one can measure it. There is no transparency across the deck. And then as you start adding in all these made up fancy crypto, wave my hands here, crypto values of something, there's issues with that. Then on top of that, there's really no value backing these. This is the other concern and issue I've mentioned over and over. And of course, the crypto crowd, is upset that I mentioned this, but there's no actual value added here. The government, the US government and the US dollar. So I agree. The US dollar is a piece of paper. That's all it is a piece of paper. Nothing more. There's no value behind that. What gives it the value is the U.S. military, the U.S. as a country, the structure, the design, because it will ensure, we hope it'll ensure here, that value, that dollar still has value. So we all agree that we're going to trade in this, which is like crypto. You could agree to trade in that. But the issue is that regulators can't really put out the U.S. government. right? Other countries could say we're not going to take it. But if the US government is the one issuing the currency and maintains it, they maintain that infrastructure around the dollar here. Now, the US military is another big piece of this as well. The military guarantees the US will stay a country, or it helps guarantee, doesn't guarantee, but it helps, ensure that we will stay a country because there are natural defenses and we have a military base to protect our interest, which includes our currency. So this is kind of a big piece of this as well. And then if you don't follow John Stark, I'll maybe link him below because he's on Twitter and he's on LinkedIn. I follow him on LinkedIn. Right, all these lawsuits are going off, and of course, there's been absolutely no legal understanding, ethical concerns from almost every crypto firm. I'm sure there's some out there that were, super concerned and ethical, but the majority of them have not. They have not been. They've acted like banks. They have slid under the radar. They have followed none of the regulations, and now, the SEC is coming back after them. And for good reason. Like, people are saying, oh, the terrible government. And I'm always the first one to say, oh, the terrible government. But in this case, we're seeing these funds are like Ponzi schemes. We're getting a bunch of money. We're driving prices up. There's nothing underneath of it. And then a lot of these founders are getting out because you've put all your money in. So now they can take those dollars back out and move them around and buy other assets, which are not crypto. So they're not even, in many cases, staying in the currencies they're in. There's a whole bunch of issues with this, guys, ethically speaking. The lawsuits are going on. A lot of these firms are trying to claim too that, like, since I was made a business, therefore I'm legitimate and the government signed off on it. That's not how that works. Again, I'm not a lawyer, but I'll load some articles as well. And just because a lot of this is kind of blowing up, it's a bad time for crypto. There doesn't seem to be anybody that really understands regulation and ethics and morals and putting all these pieces together and ensuring we don't have criminal issues and drug dealing, and which seems to be a great use for, crypto. I know I'm out. I'm out. I don't see the value add. I don't see any addition to it. People are saying like, oh, Dimitri, it's great though for transferring, currencies to my home country. Well, yeah, because you've removed all the regulations, which are all going to be kicking in here. And since you've removed all the regulations, it makes it really easy. Thumbs up. I mean, sure. But now you also have all these other implications in society, like all these other illegal activities that are going on here. So I don't see a lot of value in crypto anymore. This is not a recommendation video to go out and sell yours or buy some or anything like that. This is just why I'm getting out. This is just why I'm not involved in these markets anymore. An opportunity cost here is the last point. There are so many other great investments out there: stocks, bonds, high yield savings accounts, real estate. I don't know. Invest in your education and yourself. I know many of you are complaining, Dimitri, I don't have money for textbooks, like this good textbook I'm reading now, Intelligent Credit Scoring by Siddiqui. Yes, I've been using this one over my entire career, but I'm going back through it again. You can invest in yourself, your education. Right? These are good investments you can make as well with those dollars. That might be a better use than in crypto here. So again, not financial advice, but that is why I've gotten out of the crypto markets. Thanks for listening. Thanks for watching. And as always, until next time.